Hello everyone, how are you all, and welcome to our CA Final Indirect Taxes Foreign Trade Policy lecture. So the Hindi lecture is already uploaded on YouTube. Today's target is to cover up entire Foreign Trade Policy 2023 in 100% English. Is audio, video, everything clear? Give me a thumbs up in comment section and we shall start. Okay, so let's start with Foreign Trade Policy 2023. Earlier, FTP 1520 was applicable, but now from November 2023 onwards, all attempts FTP 2023 has been notified, which is applicable for your examination. Okay. It is effective from 1st April 2023. Now understand, students normally think of leaving FTP thinking that there is too much to study and the weightage is very low. But see, this time, since there is an amendment, means earlier FTP 1520 was applicable and from November attempt onwards only FTP 2023 has been notified. So definitely I am expecting that one question is going to come from FTP 2023. So 5 marks theory question we are expecting, plus 1 or 2 MCQ might also come. So the weightage might go to somewhere between 5 to 6 marks. So do not leave FTP. I understand there is a lot of content to be covered, but I have summarized it very much strategically, so that if you study this much for your examination purpose, it shall do and you will be able to get those 5 to 6 marks. Yes, so understood everyone. Quickly just like the video and we shall start with our today's session. So the new Foreign Trade Policy 2023 effective from 1st April 2023. Now what is FTP? What is Foreign Trade Policy? It is a set of guidelines or instructions. For what, ma'am? Guidelines regarding what? Guidelines regarding import and export. Now understand, every country would be interested in doing import and export. Why so, ma'am? Because that is how you can generate favorable balance of payment. If you keep doing transactions within your country only, how are you going to prosper? So when you bring positive balance of payments from another country, which means now you are comparatively prospering. So therefore the ultimate aim of foreign trade policy is to develop and promote foreign trade, also regulate it, so that the imports are not in very much heavy quantity, that our domestic industries are being injured, etc. And also what we want is a favorable balance of payment, means we want our export earnings, our forex realizations to be greater than what we are paying for our imports. Only then we can prosper. So which is the legislation governing FTP? The Foreign Trade Development Regulation Act 1992. Concerned Ministry, Ministry of Commerce and Industry. It has an attached office, Directorate General of Foreign Trade Organization, which is headed by DGFT. So whatever is done in FTP, means all the decisions in relation to FTP are as such taken by the Directorate General of Foreign Trade, DGFT only. It has a lot of regional offices and the headquarters of DGFT are situated at Delhi. So what is the role of DGFT? Everything. To formulate, to control, to supervise the FTP, to issue authorization for import and export, means who shall be allowed to do import and export, to give IEC code. Now what is IEC code? IEC code is import export code. Means today if you want to start a business of import export, you cannot unless you have an IEC import export code. So this import export code is also granted by DGFT only. Okay. Now monitoring export obligations, means there are various schemes that we are going to study, that if you export under those schemes, then you are eligible to get benefits which are specified in these schemes. So who is going to ensure whether all of those export obligations have been fulfilled or not within the particular time or not, so that whether you should be given the import benefits or not. So all of these monitoring of export obligations is also done by DGFT, and issue orders with respect to interpretation of provisions. So if there is any provision being issued with respect to FTP and there is any doubt with respect to its interpretation, then also the circulars, the clarifications with respect to same are also issued by DGFT only. Obviously, since import export is concerned here, we will be requiring CBIC because customs will play a role here, RBI because forex, and various state government departments also. So these are some other authorities which are also dealing with foreign trade policy. Now import and export of goods, see, understand, broadly can be classified into 3 categories. Either it can be free, means whatever you want to import export you can import. Let's say for example today I want to import this remote. It is free, I can import remote, I can export remote, there is no problem. Or for certain category of goods, import export can be restricted. Means they are not telling you no that you do not import export, but you need to take some kind of permission or authorization due to restrictions. Or it can be prohibited. So let's say for some harmful goods or some hazardous goods or drugs or narcotics kind of things, import export can be prohibited also, means no one will be allowed to import or export those particular goods. So see, unless otherwise specified, generally we say that all import exports are free only. Means if I want to import export this pen, I can. Remote I can, water bottle I can, watch I can. So whatever normal goods I want to import export I can, because import export are generally free only, unless they can be at some times restricted or let's say regulated or prohibited in some cases. Or for certain category, can you do it so? The answer is no, because there is ONGC, State Trading Enterprise, given exclusive rights with respect to same, or Food Corporation of India. So for certain specific items, only certain particular state trading enterprises can engage in import export of those particular items. So what we understand by this, that there are three categories of import export. Either it can be free, restricted or prohibited. Understood? Generally they are all free only unless they are regulated. And except for certain categories of goods, state trading enterprises have been given exclusive right that yes, they can only trade in so. Okay, this PDF is already shared in Telegram channel, so you can access from there. The link is in description. With respect to question answers, see, if you do this lecture and these theory notes, I think it shall be sufficient for your examination purpose. Still, I'll give you a list of question answers from ICI study material, like the earlier FTP question answers that were there. If there is any amendment needed to be done, I'll make that amendment and share the question answer PDF with you also in Telegram. Okay. Now, what is IEC Importer Exporter Code? See, as we have GST number in GST, we have IEC Import Export Code here. So, you cannot engage in import export of any particular item unless you have an IEC code, and it is a 10-character alphanumeric number. Now, with effect from 1st July 2017, what they did for is that today if you go and apply for IEC code, they will give you your PAN number only as your IEC code. Means your PAN is only your IEC code, but understand, I cannot use my PAN as such as my IEC code. I need to apply for it, and when they give me IEC code, it is my PAN number only. So you cannot say that just because I have PAN, I have IEC. No, your PAN will only become IEC, but you need to apply for it, and when DGFT grants you IEC code, it will be your PAN number only from 1st July 2017. IEC allotted to an applicant is permanent. Now, once they give you IEC code, it is permanent only unless DGFT cancels it. And for certain goods which are restricted, you can carry out import export only if you have permission, authorization, as already explained. Also understand, authorization is not your right. Means today if I go to DGFT and I say that I want to import these particular goods, and if DGFT denies me, I cannot claim it as my right that no, I want the right to import export. No, DGFT has this power that if I make application for authorization, they can very well refuse to grant me or renew my authorization. It is not my right. Contract may be in Indian rupees, in INR or in Forex, but understand your ultimate realization of export proceedings has to be in Forex only, because the ultimate aim of FTP is to increase our balance of payment, to bring positive balance of payment, means we want Forex to come into India. But if you are using Vostro account, then your realization can be through INR. It is an exception, but generally your contract can be in INR or Forex, any currency, but the ultimate realization has to be in Forex only. Now let's understand certain duty exemption and remission schemes. Now what is the difference between exemption and remission? Exemption means you are not required to pay duty only. Remission means once you pay and then you get back the duty. We have studied duty drawback. We have studied duty drawback in customs. See, what we have studied, once you pay duty, when you import you pay duty, and then ultimately when you fulfill your export obligations, you can apply for refund of that particular duty, means that duty is remitted to you. And under exemption schemes, since beginning only, you are not required to pay any duty only. So this is the difference between exemption and remission. So best example of duty remission scheme is duty drawback that we've already studied in customs. Now let's see some duty exemption schemes. First of all, advance authorization. See, name says a lot about it. Advance authorization means in advance they have given you an authorization. Scheme to import inputs used in manufacturing of export goods without payment of duty means I will go to government and I'll tell government that see I want to import certain inputs, consumables, fuels, oils, catalysts. Government will ask me why you want to import. I will say I will import. I will use it in manufacturing of something which ultimately I am going to export. Now export can be physical export also or can be deemed export also. What do we mean by deemed export, ma'am? Let's say you supply to an EOU, export oriented unit, who is ultimately going to export it. Then also we consider it as deemed export. We understand this thing. So I will in advance go to government and tell government that I want to import certain goods which I am going to use in manufacturing of particular thing which ultimately is going to be exported. Therefore, when I import those particular goods, government will tell me, okay, you don't pay import duty only, which is duty exemption. So here scheme to import inputs. We are talking about inputs here, not capital goods, because for capital goods we have a separate scheme which is EPCG. Advance authorization is specifically only for inputs used in manufacturing of export goods without payment of duty. What you have to do, you have to go and make an application online that please give me authorization. Once they give you authorization, within 12 months or if there is some another specified period, whichever is higher, means if there is any particular specified period, take that. If not given, then generally 12 months is there only, which can also be further revalidated for 12 months once. So what you do, you make an application and obtain authorization. Now once they give you authorization, within 12 months or this specified periods, you have to import. And if you import within this specified period with authorization, no need to pay any duty. No need to pay any duty means all of your duties, your basic custom duty, any additional duty means any safeguard duty, anti-dumping duty, IGST says everything is exempted. No duty you have to pay if you are importing certain goods within that specified period and you have advance authorization. What all can I import, ma'am? You can import inputs, consumables, fuel, oil, catalyst, or spare materials are also allowed if they are only maximum 10% of your CIF value. So whatever advance authorization they've given you means whatever is your CIF value of import, up to 10% additional spare materials are also allowed. Other than that, generally inputs, consumables, fuel oils, etc. you have to import. Now you have to fulfill your export obligation period 90 days from import. So whenever I import these goods under advance authorization, I have 90 days time to fulfill my export obligation, means within this period I have to export those goods. Export can be physical also or deemed also. Also understand, advance authorization is non-transferable, means there is an actual user condition. If I have obtained advance authorization, only I can avail benefit of that duty exemption, no other person, means advance authorization is not transferable and there is an actual user condition here. Now what is the quantity? So for most of the goods, we have SION. SION means standard input output norms. So if I go and tell to government that I want to make 100 shirts, I'll make 100 shirts and export those particular shirts. For what? For this purpose, I want to import cloth. Now there is a standard ratio that to make one shirt, what meter of cloth would be required? 2 meter, 3 meter maximum, not more than that. So based on this standard input output ratio, government gives you authorization that okay, if you want to export 100 shirts, means we can allow you 250 meter of cloth to be imported under advance authorization duty free. So based this quantity that they decide that what they will allow you to import duty free will be based on SION, which is standard input output norms. But there can be certain particular goods for which SION is not available. In that case, you can make an application that you please fix our input output ratio quantity, and based on that they will allow you import. So if SION is available, first preference will be given to SION. But let's say you are exporting some unique kind of products for which SION is not available. In that case, you can just apply for an input output ratio quantity and it will be determined by the regional authority of DGFT. As I said, DGFT has a lot of regional authorities. Headquarters are at Delhi, but every region has a regional authority of DGFT. If you are regular importer exporter, you can also avail annual advance authorization, means not for particular consignment. As I talked about 100 shirts, they'll allow me 250 meters. They'll give me an open window for entire year, that in total annual basis, if SION is available, then maximum 300% of my FOB value of preceding financial year or 1 crore. So what I exported in my preceding financial year, 300% of that FOB or 1 crore, whichever is higher, maximum this, means amount can be less than this also, but maximum this government can fix as annual advance authorization. Means once I get authorization for entire year, I can use this and import this particular quantity of materials. If CON is not available, then you cannot get benefit of annual advance authorization. Means each time you have to apply for your input output ratio, because only for material, for things which CON is available, you can get this annual advance authorization benefit. Now, you need to have an export experience of minimum 2 years. Means if you have exported certain goods in last 2 years and you are having 2 years experience of import export, then only you can go and apply for advance authorization. Then what if, ma'am, I am importing for first time, I am exporting for first time, I know that whatever I am going to import, I will use it in manufacturing of certain goods which ultimately are going to be exported. I cannot avail benefit of advance authorization. No. For you, we have a separate scheme which is DFIA, but for advance authorization, you need to be an experience holder of at least 2 years. Of at least 2 years you have export experience, then only we are going to, means government is trusting you that okay, last 2 years you are making export, means this year also you are going to make exports, and hence we allow you imports duty free. And last thing here is a value addition condition. Means whatever is your FOB of export, at least 15% value addition you have to make, and then whatever is your CIF value of import, I'm really sorry, whatever is your CIF value of import, at least there has to be 15% value addition, and then you determine your FOB of export. So let's say if I have imported goods worth 100 CIF, means at least my export FOB has to minimum be 115 rupees. Only then I will be allowed the benefit of advance authorization. So they are saying whatever is your FOB value of export, let's say 115, minus what was my CIF value of import, let's say 100, upon my CIF value of import 100, which comes to 15%, then okay, I have fulfilled this criteria of minimum value addition. This is minimum, means your value addition can be more than 15 also, but it has to be at least 15% value addition as compared to whatever rate you had imported of your CIF value. Done, man. Then let's talk about duty-free import authorization. Now this is a post-export facility. What do you mean by post-export facility? Now understand this thing very much clearly here. First here I have to make export. See, under advance authorization, I went to government, I made application, they gave me authorization, then I imported and then I exported. But under DFIA, since you are not having any experience, there was a 2-year experience condition in advance authorization. Here there is no condition. Here what they are saying, first you export something. You export something. Means you would have, let's say this is your warehouse, I had imported some goods and here I paid duty. I paid duty here, I imported some goods and ultimately I made something and I exported. Means my warehouse is empty again. Now after exporting my warehouse is empty and now I again want to import something, because it is not that I will only import export one time. This is an ongoing thing that I am going to do. So now again I want to import, again I want to export. Here government is saying that once you export, whatever inputs, whatever imported inputs you had used here, already what you have exported, for this we will give you duty scrip. For this we will give you duty scrip. And this duty scrip you can use after this export when you import again. After this export when you import again. If you are unable to export in the period given to you, see, for all schemes we have export obligation period, Archana. So if you are not able to fulfill your export obligation in this given period, you will not be given the benefit. Means whatever duty they had exempted, now you will have to pay. So duty free import authorization, it is a post-export facility which says that you import or minimum value addition has to be of 20%. Means minimum, what is your import CIF, there has to be a 20% addition and then only your FOB of export should come. Now see, here they have given 12 months, 12 months and 12 months. Why 3 12 months here? Understand with this small chart. Today I apply for DFIA. Once I apply for DFIA, within 12 months I have to export. Means I will show them that see, I am capable of exporting, I can export, okay. Now once I export, within 12 months from here, now I can import. Now I can import. And here government is saying, okay, we will give you duty exemption here. First you have to export, you have to show us that yes, you can export. Whatever inputs you had used here, for these exports, government will give you duty scripts for the same. Now when I import here, I can use the scripts and I can avail exemption, means I am not going to pay any duty. Now once I import, again of these imported materials I have to manufacture something and ultimately export. Now within 12 months I have to make this export is what they are saying. So once you apply for DFIA, within 12 months you need to export and show it to them. Then they will allow you duty free importation. Now when they have allowed me duty free importation here, again within 12 months I need to export. So for first export and import I will be required to pay duty here. Subsequently they keep giving me duty scripts. So here they are saying, and also only basic customs duty is exempt. Only BCD is exempt, means other additional duties, let's say if any safeguard duty, anti-dumping duty is there, that you will be required to pay. Other duties are payable. Now DFIA is transferable. There is no actual user condition, because see, understand, once I have exported, right? Once I have exported. Now here they are giving me DFIA benefit. What if I don't want to export again? What if I don't want to export again? It is okay. You get DFIA and you can transfer it to someone. Means now there is no actual user condition. Some other importer exporter can avail benefit of this DFIA. I can transfer my DFIA to someone. So they are saying export shall be completed within 12 months from filing online application. Then DFIA is issued. Now once DFIA is issued, it is valid for 12 months from issue date for duty free import. Now once I import, within 12 months I need to fulfill my export obligation along with 20% value addition. Tell me if this is clear to all of us. Yes, there is nothing tough in this. See, the time limits are also very much simple here. Just you have to understand that in advance authorization we get authorization in advance, but here we need to first prove ourselves. First we need to make one export to prove them that yes, we can export and we will export in future also. So whatever inputs I had used, in the export of those particular product, for that much amount they will give me DFIA. Understood, ma'am? So just remember this value addition criteria, that advance authorization 15% and DFIA 20%. Now what if, ma'am, I import certain capital goods? In that case we have EPCG, Export Promotion Capital Goods Scheme. Now here they are saying I can import or purchase capital goods. Now here understand, domestic machineries are also allowed. Means if I purchase any capital goods, let's say I import capital goods, then my import duties will be exempt. But even if I domestically purchase any capital machine and use it to manufacture something which will ultimately be exported, then government is saying we are more than happy. We will even exempt your GST etc. also. Because you understand, if there is this particular person who wants to manufacture and export something, right? I want to today manufacture and export something. I have two options available with me. I need this machinery to export. Either I can purchase this machine from India also, or I can import this machine from USA also. Now, if government says that under EPCG scheme, we give you benefit, means no import duty required to be paid if you import this machine from USA. But if you purchase this machine from India, we will levy GST. Then obviously a person would always think to import it from USA. But understand, ultimately if we import from USA, we will lose our forex because we will be required to pay in dollars. So government will be more happy na if you purchase this machine domestically from India only. Their objective is that you should ultimately export whatever you are manufacturing. So your government says that except for second hand goods, you leave second hand goods, other than second hand goods, if you want any capital goods, if you purchase it domestically or even if you import it, we are fine with both and we will give you duty exemptions in both of the cases. Means machine can be for anything, for your pre-production activities, for assembly, or even it can be domestic, imported, post-production. Means machine you can use for any particular thing, which is okay. So here your GST, your excise, your import duty, everything is exempt. And in post EPCG scheme, duty paid already, duty credit scripts issued. So if you've paid duty already, what they'll give you simply is a duty free script. Means that script you can use later on whenever you are required to pay any other duty. You can use that script and reduce your duty. Okay, now let's understand export obligation. Means today if I import a machine, today I say government that I am importing a particular machine and whatever I am going to manufacture using this machine I am going to export. Therefore government said that okay, we will allow you to not pay duty on this machine. Now export can be physical export or deemed export also, already clarified. Now what is my export obligation? Within how many period I need to issue, what amount I need to export, what amount of FOB. Now they are saying before machine, see I already had this factory running and I was not having this machine. I was having some another small machines. At that point of time also I was exporting something. So they are saying that you need to continue. So whatever was your average export for preceding 3 financial years, whatever was your average export for preceding 3 financial years, that was anyways there without machine, that you cannot reduce. So here they are saying this was anyways. See, this is my language just for understanding. Here they have simply said that for generally average export average of 3 financial years. For your understanding I have written this, that this was anyways exported before new capital goods also, so this shall continue. Now they are saying because we allowed you a new machinery without payment of duties. So whatever duty you have saved, multiply by 6 times, within 6 years you need to export. So let's say when I was not having this machine, in FY 2021, I had exported 120, in 21-22 I had exported 150, in 22-23 I had exported worth 180. So they are saying you make a total divided by 3. So whatever is your average, that you have to export only. Plus now, since you have a new machine available with you, what is the duty that you have saved on this particular machinery? Multiply by 6 times in case of import, and if it is the case of domestic goods, then multiply by 4.5 times. So if I am saving my duty as import duty, then 6 times. If domestic duties are saved, then 4.5 times. This more export I need to do within a period of 6 years. And if so this is an additional obligation, as now I have new capital goods. If 75% of obligation is achieved in half period, means they've given me 6 years of time. They've given me 6 years of time to make this additional exports. Now they are saying if within half time, means within 3 years only, I export 75%, means my export obligation was whatever is my duty saved multiply by 6 times. If 75% of this I have completed in half time only, then my remaining export obligation is waived off. Means they are saying you are so great, you are so superb that in half time you've already completed 75% of your obligation. Now we have trust in you that you will complete your remaining 25% also. So remaining is waived. Now even if you do not complete this 25%, then also it is fine. Based on trust, they let it go. And don't ask this, ma'am, what if we after this we don't do that 25%? No problem, it is waived off completely. So in half time, if you satisfy 75% of this, then also it is okay, remaining is waived off. But the general condition says that whatever duty you have saved, 6 times of that duty, or in case of domestic, 4.5 times of that duty, within 6 years you have to export. This is valid for 24 months for imports from date of issue. Means today if government gives me EPCG benefit, means I have got EPCG authorization, then within 24 months I need to import that particular machinery. Now after once I import, I have this 6 years of time to fulfill my export obligation. Right. What is RoDTEP? Very much simple. See, RoDTEP simply is based on a general accepted principle, which says that the domestic taxes should never be exported, right? Whenever you pay GST on export, government gives you refund. Why? Because there's a global accepted principle saying that if you export something, you export your goods. Do not export your duties. If government would not give me refund of GST, I would be charging that GST to my ultimate importer, means that person is bearing my country taxes. So government is saying this we do not want. And this is a globally accepted principle also. That scheme is based on globally accepted principle that taxes and duties should not be exported. Now for the taxes that we can clearly see, like GST, government gives us full refund. But there would also be some another taxes involved. Let's say if I am manufacturing something in my factory, I would be paying some other kind of small duties, taxes, let's say on my electricity, municipal taxes, etc. Now government is not giving me any refund here in this case. So government gives you a blanket rate. As a specified percentage of FOB. Like government would say that, let's say example, 4.5% or 5% of whatever you export as your FOB, we will give you a RoDTEP benefit of this. So this is a blanket rate fixed by government, assuming that in manufacturing you would have paid certain other taxes also other than GST, for which we have not given you refund. What to do of those taxes? So at a blanket rate they give you this RoDTEP benefit. I'll take your doubt towards the end, Archana. Okay, chalo. Now issued in the form of transferable duty. Now again, this is transferable, means there's no actual user condition. If I have RoDTEP benefit and if I am not interested or not capable of further exporting anything, it is fine. I can transfer my duty free scrips to someone else also who can use the scrips to lessen their taxes payment. Duty credit shall only be allowed to be used to pay basic custom duty, means whatever duty scripts you have under RoDTEP, you can use them only for basic custom duty payment, not even for GST payment or not even for some another duties payment. Now, for the advance authorization, DFIA and EPCG scheme, we had seen that export as well as deemed export both were allowed. But under RoDTEP, deemed export is not allowed. Means only real physical export if you are doing, then only you get the benefit of RoDTEP scheme. So it is not allowed on deemed export or restricted prohibited goods or any goods which are subject to export duty. Means anyways we are not trying to promote that particular good, or some minimum export value used goods. So all of these cases RoDTEP benefit is not available. Now this was all about the schemes that we had to study: advance authorization, EPCG, DFIA and RoDTEP, and I think we've understood clear distinction between all of them four. Now let's talk about status holder. Now these limits are amended this time. So earlier these limits in FTP 1520 were different, but now they're different. So might appear in MCQ. Just try to remember these limits once, because it is amendment. Entire FTP is amendment, but the content we studied earlier was same only. This content is amended content. Now, business leaders who have excelled in international trade and have successfully contributed to foreign trade, provided on the basis of export performance. Now, what is my current year export performance plus what was my preceding 3 financial year export performance? Based on that, government gives us status. Means let's say if in current financial year and preceding 3 financial years I have exported goods worth FOB of $3 million US. What is this 3? Remember, this is $3 million US. Then I would be categorized as a 1-star export house. If I have made an export performance of $15 million US, then I would be categorized as a 2-star export house. Maximum can be 5-star export house if I have made exports worth $800 million US, and this will always be calculated in US dollars only. Now ma'am, what is the benefit if I get this status of 1-star or 2-star? See, you have a lot of privileges available here. Means your procedures will get simple. Like normal import export cases, bank guarantees are compulsory, but if you are a status holder, you have that 1, 2, 3, 4, 5-star status holder, bank guarantees are not compulsory for you. You get authorization on self-declaration basis. If you apply for Sion, your Sion is fixed within 60 days only. Also, we had studied in the chapter of warehousing, right? We've studied 3 types of warehouse: public warehouse, private warehouse and special warehouse. So if you are a status holder, means at least 2 or above star status holders can even establish their own private bonded warehouses also. Then you are allowed to do sample export free of cost up to 2% of your annual realization in 3 years. So these are certain benefits or certain privileges that you get once you are given the status of a star export house. Now export on re-export basis shall not be counted. What is re-export? Let's say I imported certain goods and then I am re-exporting. We very well understand what is the meaning of re-export. We've studied this in the chapter of levy exemption also, right? We had seen that that once we import goods, let's say we repair something and then we re-export those particular goods. So your re-export will not be counted here. And export performance is not even transferable. Let's say I have a firm named A Limited, there's some another firm named B Limited. Now I was able to make $2.9 million US export and B made $1 million US export. B cannot say that I give you my performance of 0.1. No, this is not allowed. Means your export performance, only you have to fulfill your performance. This export performance is not transferable and re-export will not be counted here. Deemed export will be counted, re-export will not be counted. Now understand, for deemed export, normally we can calculate our export performance in million US. What if I have done deemed export? Let's say I have supplied to some EOU which is in India only, and here I will not be able to realize forex because that particular company is also in India. So they are saying you convert it into dollars. Now at what rate to convert? In the beginning of financial year. So whatever I deemed export, let's say in FY 2021, they are saying 1st April 2020, whatever was the rate notified by CBIC, taking this as your rupee dollar rate, you will convert everything throughout this financial year. So for deemed export, FOR value of export in Indian rupees shall be converted in US dollars at the exchange rate notified by CBIC as applicable on the 1st April of each financial year. So at the start of my financial year only, my conversion, my forex conversion rate is fixed, and using that rate only throughout the financial year for all my deemed export, I will convert my INR into US dollars, and then ultimately I will calculate that whether I have been able to reach my export performance in million US dollars or not. Now, for calculating, this is also one very good benefit might come in MCQ. For calculating export performance of 1-star status house, export by MSME units which has ISO certification, units located in northeastern states including Jammu Kashmir, Ladakh, Sikkim, and export of fruit vegetable shall be counted double weightage. What do you mean by this, ma'am? Let's say I am an MSME unit and I am having ISO certification. Means to become 1-star export performer, I need to make export worth 3 million US dollars. They are saying even if you make export worth 1.5 million US dollars, it is okay, because we want you to reach 1-star early. We want you to become 1-star export house early. Therefore, for these units, whatever you export, we will double it. Whatever you export, we will double it. So, if I am exporting fruit vegetables and I am being able to export fruit vegetables for 2 million US dollars, for me to become 1-star export house, they will consider this as 4 million US dollars. Now, once I reach 1-star, then all of these will be taken on actual basis. Only to make me 1-star earlier for these particular units, they count my export performance as double, and then they see whether I have reached this limits or not. Is this point clear? Little typical, but I think it is very much simple. That if I am an MSME unit having ISO BIS certificate, or if I am located in northeastern states including Jammu Kashmir, Ladakh, Sikkim, or if I am exporting fruits, vegetables, for me to reach 1-star, only for me to reach 1-star, whatever export I am making, they will calculate it as double. Privileges already discussed. So, this was all about status holder. Now, EOU, EHTP, STP, BTP, very much simple and not very much important also. EOU, export oriented units, hardware technical parks, software technical parks, biotechnical parks. So, what these people do, they are as such involved only in exports. Means if I am a software technical park, I will be engaged in export of softwares. If I am EOU, name says everything that I am an export oriented unit. So, they are saying that these people can import inputs or capital goods without payment of duty, without payment of any duty. We have studied this in GST chapter also. We have a chapter named import export under GST, where I have taught you this thing, that EOUs can import goods completely duty free. No need to pay customs also, no need to pay GST also. What are they going to do with these imported goods? They'll use them for manufacture, repair, remake, reconditioning, rendering of services, development of software, whatever. You cannot be a trading unit. You have to be a manufacturing unit compulsorily. Means I cannot say that I import certain goods and I export certain goods as such. Then I am not an EOU. I need to be engaged in a manufacturing activity. Only projects having. Now this condition is only for EOU. This condition is only for EOU, not for EHTP, BTP or STP. Only if I want to be categorized as an EOU, I need to have an investment of at least 1 crore rupees in plant machinery. So, only project having minimum investment of 1 crore in plant machinery shall be considered as establishment of EOU. Now, even if I am established as an EOU, means I 100% export everything only, but my investment is less than 1 crore, they will not consider me as EOU. But this minimum investment criteria is not for EHTP, BTP or STP. Here less than 1 crore investment is also fine. For EOU, 1 crore investment is compulsory other than agriculture. Means if I am engaged into agricultural product exports or handicraft exports, then less than 1 crore would be okay. Other than that, EOU minimum 1 crore investment in plant machinery is required. Also, you must have a positive net foreign exchange earning calculated cumulatively in a block of 5 years starting from production. What does this mean? Here they are saying, let's say I am an EOU today. I start importing certain goods. Now when I import, I need to pay forex, right? When I import, I need to pay forex. When I export, I will earn forex. So whatever I pay and whatever I earn, this has to be a positive balance, means my earnings has to be more than what I am paying. Now you might argue that, ma'am, this is our first year, we have just started production, this is our first year, how can you expect in our first year that we get positive forex earnings? So your government is giving you a cumulative period of 5 years. Cumulative period of 5 years means from the time you start your production, in a block of 5 years at least you can reach positive net foreign exchange. Yes, let's say first year I had negative net foreign exchange of 20, second year I have negative foreign exchange of 40, but third year if I have got positive 70, fourth I have got positive 20. So cumulatively in a 5-year block, if my total is positive, then it is fine, because it is very much logical also that yes, in initial years you might be paying more as compared to what you are earning, but ultimately 5 years are more than enough to reach a break even and also earn positive forex for India. Now, so a DTA unit means a domestic tariff area unit. If supplying to EOU, STP, EHTP, BTP, it will be considered as deemed export. This we have also seen in GST also, that if I supply to them, it is treated at par with export only, considered as deemed export, and whatever GST I will pay, I get refund of this particular GST. Now, what if I am an EOU, BTP, EHTP, I have imported certain materials duty free and I have unused material left, means whatever I was supposed to export, I have exported. Now some unused material is left with me, what I can do? You have three options. Either you transfer it to some another EOU, then it will be treated as import for that particular receiver and he or she will deal in his or her particular manner. Or you export it, means if there is unused material, you export it as it is. Or you can in fact clear it or dispose of in domestic tariff area also, but then in that case you will be required to pay all of those duties that you have not paid earlier. So you have three options available with you, either you export or you clear. These two things we already know. One more thing is there that you can transfer it to some another EOU, EHTP, STP, BTP also, and it would be considered as import for that particular unit, and now that unit will treat it as if he or she had imported that particular goods only. So deemed export, this question comes in examination a lot of times. For like 4 to 5 marks theory, they will ask you give examples of deemed export or what are deemed exports. So simply goods do not leave India in deemed export, means I am supplying to a unit, which is in India only. This unit is ultimately going to export it further. So when I supply to this unit, it is known as deemed export and I get refund of whatever GST I have paid. If you talk about examples, it can be supplied to EOU, STP, EHTP, BTP. It can be supplied under advanced authorization, DFIA, EPCG, as we've already discussed, that these people, if not importing from somewhere and purchasing them domestically only, I supply to them, for me it will be considered as my deemed export, because ultimately those goods are now going to be exported. Or supply to mega power project, nuclear power project, UN or international organization for official use, and here because I am supplying goods in India only, my payment can be received in INR also or forex also, which is fine. Now merchant export documents. What do you mean by merchant export? Say for example, I am a manufacturer. I know how to manufacture, but I don't know how to export. Means I am not very much well aware about the import-export procedures to be followed. But whatever I manufacture, I actually want to export. There are a lot of people like that. So there are these merchant exporters. What they do, they collect all of these particular goods from different manufacturers who want to export but do not know how to export. And ultimately, this merchant exporter is going to export these goods. Means this guy is not manufacturing anything. He's just purchasing it from some manufacturer and ultimately exporting it. This is known as merchant export. Now your government is saying the ultimate manufacturer will get benefit, because my objective as an ultimate manufacturer was to export. I was not interested in to get involved in all the export procedures. Hence I found someone who would ultimately export it. So your government is saying that we will give all of those benefits to the particular manufacturer only and only if the shipping bill or bill of export, means the main export document, the shipping bill or bill of export contains name of both. See, ultimately this merchant exporter is exporting, means invoice and everything will be in name of this merchant exporter only. So the documents will also be in name of this merchant exporter. But government is saying for us to recognize and to give benefit to the ultimate manufacturer, we want you to mention the name of manufacturer also in your shipping bill or bill of export, the original supplier. And then only we are going to give you all the benefits. Then later on the invoice, the bank realization certificate, the export order, this all can be in name of merchant exporter, but one main document, which is shipping bill or bill of export, shall contain name of the original supplier or the original manufacturer. Now this is also a new point being inserted, so this can also potentially come up in examination. Developing district as export hub. This is newly added, might come in that 4 or 5 marks question that I am saying is going to come. Okay, so what do we mean by this? Now in India, understand, mostly all of the districts have some or the other particular goods in which they are famous. Right? If we talk about Rajasthan, there's a lot of bandhani work in Rajasthan. Then for particular states, we have chicken curry. So we have different types of arts in India, or different types of potential goods which have a good export potential. So under this scheme, what government is trying to do is to identify 2-3 high potential products or services in a particular district, that if we give dedicated resources to these districts for these particular goods, they can excel very well in exports. So here 2-3 high potential goods, products or services from district may be prioritized, and comprehensive plan are being made so that we can make them good in export. So your products or services with export potential in each district, identified an institutional mechanism in the form of District Export Promotion Committee. So we are going to set up this District Export Promotion Committee at a district level, who will ultimately make a district export action plan, and based on this plan we give them the infrastructure, the resources, and we try to remove their bottlenecks. What do we mean by bottlenecks? We understand bottleneck in SCMP, that what is the constraint, what is the resource that is restricting us. So you remove their bottleneck so that they become good in that particular product, and then we can export it. So here we provide them support for export promotion and address what are their bottlenecks for export growth in that particular district. What is AEO? Not very much important. Authorized economic operator. So all of the entities that are involved in import export are granted the status of. So entity engaged in international trade is granted a status of authorized economic operator if customs approves it. Means all of my import export satisfy the supply chain standards, then government gives me a status of authorized economic operator, and then I get certain benefits. We give extensive benefits including preferential customs treatment in terms of reduced examination, faster processing. Also we had studied that deferred payment point, if you remember, that for certain AEOs for 1 to 15 date, whatever is your bill of entry, you can pay on 16th. For 16th still remaining of the month, you can pay on 1st of the next month. If you remember the import export chapter, we've studied this, that they give you the deferred payment facility also, but for that you need to be recognized as an authorized economic operator. Now what is TEE, Towns of Export Excellence? So these are the selected towns which are already contributing significantly in India's exports. So selected towns which are already contributing handsomely to India's exports by producing goods and specified. Now we grant them the status of Towns of Export Excellence, and we make sure that they get all the targeted support and all the infrastructure that they want. Ma'am, isn't it similar to this export hub? No. Here we are trying to develop that district into export hub by giving them support, by identifying what products can be there. Here they are already handsomely contributing, already. They are towns of export excellence. So here we provide them with targeted support and infrastructure development to maximize export competitiveness and move them up the value chain. This was all about the schemes, the deemed export part and the status holder part. Now some small other provisions which have MCQ potential, like this cannot be asked in theory, but yeah, might come up in that 1 or 2 marks MCQ. So let's talk about gift. Can you import gift? Means I'm saying it is gift, no transaction value, means duty free. They are saying no, prohibited. Means you can only import if you pay the applicable customs duty. But if there are some life-saving drugs or Rakhi, means if your sister stays out of India, she would be sending you Rakhi, which is fine. So some life-saving medicines, drugs or Rakhi can be imported as a gift. Other than that, it is prohibited. You cannot import something as a gift. You need to pay the applicable duties. And only Rakhi can be imported duty-free, not even the gifts relating to Rakhi. Can I export something as a gift? Yes, permitted up to 5 lakh in a licensing year. So up to 5 lakh rupees of FOB, I can export gifts permitted. It is in a particular year. Then sample. Sample, they are saying you can import up to 3 lakh, allowed duty free. For vegetable, seed, new drugs, bees, authorization required. Means normally for all the goods you can import certain sample of that particular good up to 3 lakh rupees of value. But if you want to import sample of vegetable, seed, new drugs, bees or defense items, we are still going to allow you till 3 lakh. But you need to at least once take an authorization for this. But if you are importing sample of tea, then only 2000 CIF will be allowed without authorization. Once again, if I want to import certain sample, up to 3 lakh I am allowed. You need to remember these limits. Yes ma'am, because they might come up in MCQ. So up to 3 lakh I can import samples. But if I want to import vegetable seed, new drug, bees or defense items, still 3 lakh limit is available with me, but I need to take an authorization. And specifically for tea, without authorization, only 2000 rupees CIF I can import as sample. Export you can allow, it is allowed duty free as much as you want. Whatever is your scrap or waste generated in SEZ units, you can dispose of freely in DTA. Very much simple. We've seen this in warehousing chapter also and some chapters also, that after manufacturing, whatever is my scrap or waste left, it is okay. You pay the applicable duties and then you can dispose that scrap in domestic tariff area also. Second hand goods, again very much simple. There's this chart. This chart is taken from ICAI module only. So we are going to thank ICAI for this particular chart. So here they are saying what to do of the second hand goods. So if the second hand goods are other than capital goods, imported for the purpose of repair refurbishing, means I am importing other than capital goods to repair them, to refurbish them, it is okay, freely importable. There are some specific conditions that you need to fulfill. For remaining goods, it is restricted for import and can be imported only if you have authorization. Means if you want to import certain goods which are not capital goods, certain second hand goods which are not capital goods in that case, and not even for repair purpose, for some other purpose you are importing them, then they are restricted. Means once you need to get authorization, then you can import. Okay. And then for the capital goods, they are restricted. Means if I want to import second hand capital goods, air conditioner, diesel generating set, desktop, refurbished items or all other notified electronic items, I cannot without authorization. Means if you want to import second hand AC today, you cannot unless you have an authorization. But for other capital goods, free import is allowed. If I am importing it for refurbished, if I am importing it in refurbished, reconditioned spare of capital goods for which a chartered engineer certifies that 80% existence is there. Means it is a second hand good, a capital good, and not covered in these goods. And if an engineer says that they are second hand but they still have 80% life left in them. So let's say if there's a particular capital goods whose useful life is 10 years and an engineer certifies that still this good has got a life of 8 years, means at least 80% of the total life, 80% residual value is still left, it is okay, I can import it for free. And for other second hand capital goods other than those listed above are also you can freely import. So if these goods, refurbished, reconditioned spares of capital goods for which a chartered engineer gives a certificate that 80% life is left, you can import them free. And for all other second hand goods which are not listed here, and they are capital goods, you can import them duty free. So this chart as it is, you can refer it. It is also not very much important. It was given in ICI module, so I have taken it as it is here. So done. This is all about foreign trade policy. If you check the module, it is approximately 57 or 56 pages if I am not wrong, which we have completed in 9 pages only, because it does not make much sense. It is going to come in exam only for 5 marks, or maximum if an MCQ shows up then 5 to 6 marks. So reading unnecessarily 60 pages for 6 marks would not make sense, and ultimately you are going to leave FTP if I tell you to do so. Therefore, what I feel is important, and based on past trends what normally have been asked, I think these 9 pages are more than enough for your preparation. Make sure to not leave anything from these 9 pages, because whatever churning was possible I've already done. I've converted 60 into 9. You don't try to convert 9 into 3, right? Otherwise you will miss a lot of portion. So every single line, every single word in these 9 pages is important, and make sure to complete entire FTP from this. If you want some questions to practice, they are pure theory questions only. Like they directly ask you, explain what is advance authorization. They directly ask you, give examples of deemed export. So the questions are also theory questions as such only. But still, if you want, I'll share the question answers list from you from the ICAI study material. If any amendment has to be done, I'll do that. Hope you enjoyed this session, and this was all about FTP. With this we complete everything, means all of our English marathon has been taken. I've uploaded English question answer solving videos also, and this last one topic was left in English, which is FTP. That also we've completed. Tomorrow noon 4 PM I have scheduled revision test paper discussion in English, so that also will complete. I have already shared RTP video in Hindi, but some students said that ma'am please put in English also, so no problem. Tomorrow noon we are meeting again for RTP revision test paper discussion. So if you have not solved RTP yet, make sure to at least give a try. So if you have any doubt, it will be cleared tomorrow. Done everyone? All the best for your examination. Now hardly 1 month left, so give your all, last shot, best shot, I keep saying it, and take care. See you all tomorrow for RTP discussion. Bye bye.